exploration producing company, expanding our resource every year by about 100 to 200,000 ounces, and keep scaling up that production since over the last 4 years from 16,000 ounces a year to now we're about 40,000 ounces this year and next. So I'll walk you to our plan to reach 100,000 ounces. All this has been done organically through our own treasury without diluting the capital. So in the mining space, it's very uncommon. So last year we did 32,000 ounces, $32 million EBITDA, and 11.5 million profit over that year. This year, over the first half, we came slightly under our expectations. For a specific reason, we changed our mining methods. We use two mining methods. One is mechanized mining, cut and fill, and the other one is traditional mining, raised stope. And we've switched 100% raised stope to minimize dilution, optimize the grade. We have those very particular high-grade veins of 1 meter to 2-3 meters. And to optimize the mill, it was just far better reducing the dilution from the mechanized mining. So we've switched our equipment. Our costs went a bit slightly up in the first half. We've got that under control. We just hired the perfect mine manager to control that dilution. So you can see in the second half a significant performance increase in our costs, and specifically with the current gold price, we'll do very good. So we have about 92 million shares out. Management is a big owner of the company. We own about 70%, and we're highly incentivized to perform. Therefore, our last capital raise was done in 2020 in February. So it's been 4 years. We've been growing from 100,000 ounce resource to 500,000 ounce, going to 1 million ounce plus. And I'll show you in the next couple of slides how we do that. So we're in the heart of Antioquia in Colombia. We're surrounded with giant deposits of multi-million ounce. Our next door neighbor is Aris Mining, $1.2 billion market cap. The mine is called Segovia. It's 5.5 million ounce resource. The first thing I can say is they're down to level 23, I believe, which is about 2.5 kilometer vertical in their mining. We are at Cordero at 250 meters vertical. So we're a couple of kilometers sharing borders to deposits each other. And I think we're just having the next Segovia mine in the building. Okay. We are in the same batholith, same geology. You can see that the O2 faults going across our property. We have at the top our Cordero Mine, which is our main operation. We have the past producer, El Limon, which is about 15 kilometers right on strike. We have a new discovery that I'm going to demonstrate a bit later. We have the Aurora Machuca mine, and Segovia is right there with Aris. So going back, we have 4 mines, 3 permitted, and 1 getting permitted. So the Cordero has about 1 kilometer east and west of development. As I said, 250 meters vertical. The projected grade was 7.4. We've been mining an average grade of 8.4, and that should be improved with the new mining method. That's the diluted grade, by the way. And we're targeting to produce 85,000 ounces in the next years by the expansions through the exploration. And it's always for us to maintain that 10-year healthy mine life. So the minute we have that 1 million ounce, we are scaled to produce 100,000 ounces without any capital. All the capital investments have been done. So you can see the Phoenix portal. It's built to reach at least 200,000 ounces of production. It's all built to scale. This is the ore body with the high-grade sections in red and pink. So high-grade quartz veins are erratic, they pinch, they swells, so it's our drilling. So we have 2 underground drills that make sure that the mining happens diligently and we don't miss the vein. So we drill at an all-in cost of $60 per meter, and it's embedded every year, 40,000 meters of exploration to expand that resource. Okay, so we're drilling from underground, so we're cutting a lot of the dead money from surface down to your ore body. Okay, and our cost per ounce is $1,300 all in. So the upside of Cordero, for sure, we're opening at depth, and there's on strike. But our new VP Exploration made a significant discovery for us. We found a new parallel vein that was never discovered. It was not showing up at surface. We found it through the soil geochemistry, and then we drilled it, and it's about 30 meters away from the underground. This is a bit past due because last week we've announced another extension to that discovery on the longitudinal side. So it returned higher grade than Cordero, 2.7 meters of 11 gram, 1.5 meters of 13, 2.1 of 9.25. It's typical grade quartz veins, what we're getting and what we're looking for. This is a bit further, I'll skip that. Our new mine getting permitted is the Nechi deposit. It's 25 kilometers north, no problem trucking ore there to our main mill. We have a 43-101 of 128,000 ounce. We have 2 drills working on several projects. There's one there. There's multiple veins, I'll show you. We've drilled, the resource is constrained within that drilling of the 2 main veins and a bit the upper one. So there's plenty of upside of doubling that resource to 250,000 ounce. And again, this is to a vertical of about 200 meters. So there's plenty of exploration at depth can be done. We've already done 2.3 kilometers of decline. So the minute we have the development permits, the minute we have the operational permit, this can be operating. We have already the mining schedule, so the first year will produce about 5,000 ounce, second year 28,000 ounce. In our production profile, it's not even embedded. So we can easily demonstrate how we're gonna come from 40,000 ounce to 70,000 ounce the minute this gets permitted. Machuca deposit, it's the closest deposit that produced gold close to Segovia. It has an historical 140,000 ounce, 138,000 ounce, which is not 43-101 compliant, but we're drilling to bring that forward in the next year. There's the underground workings, it's permitted, so the minute we bring enough resource, we'll be able to put mine plans and bring more ore to our second mill. This is the El Bagre complex, our main mill. It's built to reach 1,000 tons per day. We're right now operating at half of its capacity, so we have plenty of capacity and feed. We have about 600 employees there. The tailing pond facility has been extended, so we have everything to produce 100,000 ounce right there. This mill's worth about 100 million. And if you look at the market cap of Soma, it's about 45 million today. So there's a fair, honest discrepancy in the value embedded in the company. Our second mill, El Limon, was shut down 6 years ago. It produced historically 380,000 ounce at 20 grams per ton material over a vein that had a width of about 30 to a meter, 30 centimeters to a meter. So our VP Exploration found through soil geochemistry a second parallel vein potential. We drilled 2 intercepts, which returned 1.4 meters of 20 grams and 1.5 meters at the top of 22 grams. So this is one of the most low-hanging fruit. Again, full development are there. We have a mill ready with a capacity of 400 ton. But remember, we produce 8 grams At Cordero, this is almost triple the grade of Cordero. So 400 tons here is another demonstration of how Soma can scale rapidly to 100,000 ounce plus a year production. So this is the very conservative scenario of how we're going to grow and how we've grew the company. But again, the company is already built to achieve and surpass those numbers. It's a function of the resource. So drilling the resource with our 4 drills, 2 surface drills, one at Machuca, one at Limon and Aurora, and the underground workings at Cordero, all of them together are working at increasing that 500,000 ounce resource into 1 million ounce plus. And then therefore, we'll be able to scale and reach. What are the economics behind that? We make at $2,100 gold, we make $1,000 EBITDA and $500 net profit after tax. So if we make the projection, and that's the sequence we're targeting, is to increase that resource to reach 100,000 ounce. 100,000 ounce would generate $100 million EBITDA and $50 million of profit at $2,100 gold. And when we look at gold today, it certainly surpasses those numbers. So next year, because it's going to be the first full year, we'll be around 45,000 ounce a year. We should do, at current gold price, 60 million EBITDA and 35 million profit. So that's a very healthy projection for a $40 million market cap company. Then the last thing, which is important, and we get questioned, is the ESG and the programs you're running and how you get along with the government and the communities. I'm from Quebec. Quebec is well known as a mining country. I've been taking 5 to 6 years to permit projects, from discoveries to feasibility and operational projects, permits. So in Colombia, we do stuff in the same way we do it in Canada as a Canadian company. So we do take security, we do take environmental very seriously. And over a period of 9 to 12 months, you get to permit your operation. So you have a ticking box, and you can go, and yes, there's politics like everywhere, but you get things done in a much more effective way than we would do anywhere in Canada. Then with the communities, we've built a lot of things. We've planted over 5,000 trees per year. Next year, we're targeting to be a net zero carbon mine. So on the ESG point, we've been very compliant. We've built a hydro dam in the community in power access, so we share power. We have our school program, our agricultural program, and you need to listen to the communities and be very upfront with them, and each year trying to bring back money in the community so they feel that you are helping them in the best way. So that's pretty much. And safety is very important. We never had reported any fatalities or any incident since we compare, because this land package over here was assembled by us. Some of the past producing mines had multiple injuries and downtime for injuries. We've really tighten that up and bring our Canadian standards and safety standards to the mine. So, yeah, and that's financial figures that each of you have your own metrics to look at. But anywhere I twist it, it's a very, very compelling situation.
Right, thank you for that. Fascinating with Colombia, of course. If we look at the management and the board of directors, how do you find, or how do they find and attract the management and the board?
Well, management and board is led by Jeff Amson and Glenn Walsh, who are the two major shareholders of the company. Basically, they wanted to capture an opportunity. And with the limited time we have, but I can, it's over. Oh, no.
There it is.
Can we go back? Yeah. Here. Every little star is an artisanal mining adit. They're our first pathfinder for sources of discovery. And we have a deal with them. Every first 50 meters of the property, they belong to them. So we never come in any questions with that. And then after even 30 meters, with ventilation capacity and security, they prefer to walk away and find another vein. Yeah. So we have a fairly good relationship. But where do you find in the world so many gold opportunities? Well, it's in Africa, and it's in this type of environment. And there's truly an immense upside. The only downside is high-grade gold veins cost a lot of money. If you look at various deposits that have been drilled over the last couple of years, in Quebec specifically, the windfall from Osisko, the Amex Gold Perron deposit, they needed to spend hundreds of millions of dollars to come out with a resource. Here we're doing it through cash flow. So that was the most interesting feature, is to be able to produce, profit, and expand resource. And our team has been building mines across North and South America over 40 years from Glenn and Jeff. So you have mining expertise for a long time. So all these combinations of factors, the low-hanging fruit gold sitting there, made the idea of building Soma Gold. I don't know if it's a long question to answer, but
they seem to be really liking the gold nugget of this project. And one thing that you were going to restart and increase the activity, but you are selling, so you have a healthy cash flow. Yeah. But would you need to invest more to achieve your, let's say, future goals, or would you run that on a cash flow basis?
We run on a cash flow base. The last financing was made to build all this infrastructure, all this underground infrastructure, and it was in February 2020. Over the last 4 or 5 years, we haven't raised any capital, and we've circulated the capital through drilling for resource, underground expansion, and milling capacity. So those were the 3 drivers of growth for us. And every stage, there's a flat line, and then there's a bump. So we're right now very close to a next bump, because it's been 2 years we've been increasing very small capacity, but now we've done a lot of work in the last 12 months, so we're ready to take another step forward.
You're ready to take another step forward, but also ready to reap the harvest. Thank you very much.
Thank you.
Good luck. Thank you.